Hi, welcome to Archaeversity, and this is Professor Ramakrishna, Professor of Finance at one of the leading business schools in India. Through this video channel, that is YouTube channel Archaeversity, I share my knowledge in financial accounting with students, practitioners across the world. In this lecture, I am going to introduce you to the topic of expenses, that is as a part of basic terms of accounting. This lecture series or this lecture is aimed at introducing you to the different types of expenses that businesses incur to generate revenues. So without much delay, I'll take you to my OneNote where I'll explain you this concept with the help of a real company's income statement. So expenses are the amount or money spent by business to generate revenues. In the sense, let us say a company is in the process of selling that personal care. Here I took an example of a CNP which manufactures and sells personal care products like a toothpaste, then your detergents and other personal care products. So to sell this, in the sense to sell their products or products and services, they spend different kinds of expenses, like they spend expenses on manufacturing of these particular products. Then they spend expenditure on selling, administrative, right? They also spend expenditure towards depreciation and taxes, etc. So these are all the different expenses that a company incurs in producing or developing their products and services. So in this lecture, with a real-time example of a Colgate-Palmolive income statement, we'll see what are the different types of expenses this company incurs to generate its revenue. So here we have a revenue from operations. This is the total income that the company earned. So to earn this income, so the company spends on different items like expenses like cost of materials consumed. This is the cost of a raw material consumed. This is the amount that is company expends to generate this revenue. Then purchases of stock in trade, changes in inventories. Then the company pays employee benefits in the terms of salaries, wages, then incentives, bonuses and all. Then it also has a finance cost like interest expenditure, etc. Then they have a depreciation and amortization and other expenses. So these are the different expenses that the company incurs. Now expenses all these expenses are incurred to generate the income or a total revenue. So if you go with a more detailed description of other expenses, so here we can see that the consumption of stores and spares, processing charges, power and fuel, freight and forward charges, lease rentals, rates and taxes, insurance. Then you have a maintenance for plant and machinery, building and others. So these all are direct expenses or other expenses that the company incurs. In addition to that, you also have expenses towards advertising and fees and commission to independent directors, auditors remuneration, royalty paid and royalty expenses. Then you also have expenditure towards the corporate social responsibility, bad debts written off, then provision for doubtful debts, foreign exchange loss, travel and conference expenses, outside expenses. So these are the broad classification of different types of expenses that company spends. Now whatever the nature of these, in the sense classification, whether you may say that this consumption of stores, process expenses, power and fuel, or you can say bad debts, or you can say travel expenses, all these expenses are deducted from the total income or total revenue or revenue from operations to ascertain the profit. And there is these are not the limited terms that you should be familiar with. There are multiples of terms in financial accounting related to the expenditure. So as you keep on working on different companies' financial statements or different company annual reports, you will come across with multiple types of expenditure. But one common thing related to expenditure is that whatever the nature or whatever type of expenditure is, whether it is a fuel expenditure, rates, whatever, these expenditures are deducted from your company's total income to ascertain the net income, right? So in the sense, in simple terms, expenses are the amount which is spent to generate a revenue for the organization. So these may be of a different forms. So in this course, that is a financial accounting, introduction to financial accounting, as we move from the basics to advanced topics, like once we start working on your double entry of bookkeeping, then journal ledgers, then preparation of trial balance, and then financial statements. That is a whole accounting process or accounting cycle. At each and every stage, I will introduce you with a new and innovative or new topics or new items of a financial accounting. But as I explained you in some previous lecture, where I introduced you to the different keywords of accounting, where we talk about assets, liabilities, then owner's equity, revenue, and expenditure. So all the activities, all the financial transactions and events pertaining to business can be classified or can be grouped into any of these five, not beyond this. So right, so getting familiar with these things is not going to happen overnight or with this lecture, but as you come, by the time you complete this course, you will be familiar with most frequently used terms in financial accounting. Trust me. So thank you very much for listening to this lecture. Keep watching and keep practicing or try to understand these terms by looking at the different companies' financial statements and annual reports. Thank you very much.